So no harm having at least a 2-year perspective. But let's talk about the stock of the day, which is PG Electroplast. You know, what is also happening is Street is getting a realization of the extent of impact of the war. And remember, gas supply is a big pain. Now, they have put out an exchange filing talking about disruptions that they're facing, that PG Electroplast is facing because of hit of gas supplies. Puni joining in with more.
Well, thank you for that. The first instance, essentially, where the companies come out and said that because of constraints of LPG, they are seeing production impact, and that's likely to be something that the Street is taking note of. Stocks down 13% as we speak, but the company's gas suppliers have actually essentially, said that under its gas sale and purchase agreement, they are seeing shortage as of now. The sale, this is also due to largely a constraint because of the vessel constraints due to the maritime restrictions, which is disrupting supply. That's the news flow which is mentioned in the exchange filing, and that the Middle East conflict is worsening currently the situation as we speak. Now, this is, the allocation of LPG to PGEL specifically has started to impact from 9th March of 2026. So from today onwards, they have started to see production impact. But the more important question is what's next? Now, there are three key aspects. The companies, of course, currently assessing the potential supply curtailments that they would see, and the supply curtailments is an important word to use here. They've also said that while they are looking at alternate resources, the potential impact of the ongoing procedural impact cannot be quantified is what they've highlighted as well. So while production is impacted, there is supply curtailment. They haven't quantified it. The one key question though, what is next? Now, the key question that does the LNG supply hit or the production reduction essentially as a power source will get impacted? And the answer is that while we are awaiting more details, let's go across to the previous slide, because the answer is more important, that the companies with LNG as a power source could get impacted. So your steel makers, your boiler makers, all could get impacted because of limited LNG supply impact, and hence you could see that on PG. Finally, the biggest talking point why the stock might be down now is the impending cut in guidance for FY26. Now, the company had mentioned that FY26 revenue stands at 5,700 crores, but for the first 9 months, it's been 3,500 crores. So 2,200 crores of revenue was expected in Q4. Does that still stand? Is the key question. And on profits as well, when you look at the target of 300 crores, the first 9 months has only been 132 crores. So possibly that's where the Street is anticipating a cut coming from the company and cutting the guidance. Essentially, this could be something to watch, but overall, this is the story of PG Electroplast, a tough one for its investors yet again.